Vincenzo's Go Crypto Investing this September the 21st, I believe. October, I'm sorry, I'm a month behind. October the 21st, 2025, noontime. Gold and silver bullion, cryptocurrencies, and cryptocurrencies. Peter Brand, mostly known in his media as a legacy trader or veteran trader, thinks to his 50 years of existence on the financial market, has just revealed an important opportunity that may be similar to buying Bitcoin at $1. Surprisingly, is not crypto about silver. And the funny thing is about Peter Brand, we're Bandit. Peter Brand, it looks like bandit, like he's going to walk away with your money like a bandit. But where were you on the price of silver when it was at 16, 20, 30, 40? Why do you wait till it's at $50 to say, I'm a legacy trader and this is the time for silver prediction? Unless it's silver's going to crash, but he said it's similar to buying Bitcoin at $1, right? Why weren't you warning people of this before when it was breaking up with your fancy chart and your fancy lines and your fancy targets and your fancy this and your fancy that? Now you're warning people after it's at a new all-time high. Obviously, it's going to have a short-term correction now, right, for long-term gains. In his newest X post, Brand suggested the idea of buying as much metal as possible and, if necessary, even using ultra-leverage call options, suggesting taking out loans to capture the trade might be the generational play for Gen Z and millennials. Wrong. Bad information, in my own personal opinion. Why? Because he's saying to use calls, right, where you can lose all of your money essentially overnight, right, and go negative. Then he's saying use ultra leverage, right? So that way when it goes down, you either get margin called and lose your shares, or you have to deposit money you don't have, so you're going to lose your shares. That would have made more sense to go ultra leverage when the price of silver bullion was sitting down there between $17.50 and $25 for 4 years after COVID, when it woke up, when it went to 30 and then went back to about 18. He was silent then. He's trying to lead you into slaughter, right? But I agree with them buying silver bullion and mining stocks, but not on ultra leverage after it hit an all-time high. He's trying to lead you to slaughter. To provide his opinion, Brandon points to the silver chart, stretches back to 1970. Vincenzo's Go Crypto Investing has went over this extensively for 5 years, and you would have had the first mover and not this advantage. And that's the important to be a Jabroni Killer member and to support the channel. Marking, and we showed these patterns, the cup and handle and the gold chart, and the cup and handle, you can see it there in the 3-decade-long chart from 1980 top to 2011 top. That's a cup and handle. And then the handle breakout was from 2011 through 2021, where it broke out of a handle, right? And now you're breaking out of a neckline like gold did a year ago, right? And then gold 2,620 pivot price for much of the last 10 years. Gold is now pushing towards 5,000. Bitcoin at $1. Silver last explosive run 1980 to 2011 both ended in parabolic spikes before crashing back. But the background of 2025 is to make the current step up different. Monetary tightening has run its course. Fiscal imbalance are worsening, and ETF flows and precious metals are starting to mirror Bitcoin 2024 run. Something we've covered here extensively with record-breaking inflows into these ETFs. Gold has prospected when a safe haven hedge was needed, but silver thinner liquidity and industrial usage gives it more upside potential right now. I do believe there's a silver squeeze about to take place. I believe the silver and gold bullion, this correction, is to flush out all the max leverage like that guy was talking about. Recently, people started going on buying calls, going 50, 60, 70, 80% leverage in their portfolio, and it's due for a quick flush. And I think we're going to have a ferocious buyback here in the next couple of weeks. Could this thin out the rest of this week? Absolutely, but I believe a big buyback is coming because next year, I believe, is the end game of the mining and gold bullion bull market phase where we hit our euphoric blow-off tops, but that's not till next year. And I believe $100 silver will happen. This is just noise in between then. But that Peter is trying to lead you to slaughter if you go on max leverage or calls. Because a call, if you take it out for a year from now and it doesn't hit that, and say you put $10,000 on it, you lose all your money or 75% in a week or 100%. Say you use max leverage, right? And you have 10,000 in your trading portfolio and they let you use $8,000 in leverage and you use $8,000 in leverage. Well, then you have a 10% correction like today in silver and you're just getting into it, you're getting leverage called where you're liquidated and you lose all your money, right? Only invest what you can afford to lose, and then steady invest. If you started investing yesterday and you put $10,000 across the mining stocks and they're down 12% across the board today, sprinkle some in, right? And then next week, if it's down, sprinkle some more in and just start a consistent investing until it gets back to where you originally bought in at, and then stop and then see where it goes, right? Don't go on max leverage. Don't go calls. That's a game that you need to really understand what you're doing. It's a lot more into it than just buying shares and reading earnings reports and forecasting where you think it's going to go over the next couple of years. Same as the Bitcoin price. We had a nice bounce back here the last couple of days. We bounced and held the 200-day moving average at 108,000 and change. And now you can see, as we got to get this video moving, now you can see we're sitting just below the 114,000. We wicked on exactly at current time at the 50-day. You need to get over the 50-day, then you can make a run up here at 123,000 and change. If you get rejected by the 50-day, this becomes your underneath major target to look for at 95,591.38. So you got to get above and breach and stay above this 50, and then you can try to come up here in Bitcoin. If not in Bitcoin, you're coming down here. We're going to run through these. DGB is another one. You've had these overhead moving averages and all these altcoins since January just continually forcing you down. You've had a couple of nice rallies from swing lows to swing highs, from swing lows to swing highs, from swing lows potentially to another swing high. But the consistency here, ever since that blow off top in December, January, it's been the moving averages that knocked you down, right? So in order to get bullish, you have to continue to move up, breach these three short-term moving averages that are in the way, hold this 0.00838, and then look like that. Then you are short-term bullish, right? And you're changing the short-term structure of the market. Until you do that, these continuous bounces up will just continue to get rejected, and you're going to continue to knock down lower and lower in support. And right now, that's option A to get bullish over the next couple of weeks to a month. Option B is you just continue to trade up, get rejected, come back to this critical area that you wicked on, and then you slip that. And if you slip that, your next low is way down, because that is an all-time low right here, I believe. And if you breach that, you would be in price discovery to the wrong way. So we're going to continue to watch that. The AMP is the same thing. You can see we're sitting there, and we drew up yesterday your bullish scenario in blue, because you've had these overhead moving averages repeatedly knocking you down. The same thing as DGB for the last 5 to 7 months, right? And until we can breach on top of that, the price is going to continue to go down. The 0.00137 is the all-time low. The blue option is how you avoid that. The yellow option is how you run your way into that and then go into price discovery the wrong way. Either way, in the short term, I still believe next year, 12 months from now, when we talk back, if God lets us be alive in 12 months, me, you, and everybody listening, I think when we talk 12 months from now in the fall of 2026, I think we're going to have chances to take massive profits up here, since we bought way down here, right? Since we were buying all in this area, I think 12 months from now, we're going to be selling for much, much higher than where it's at, even if the short term there's more pain, right? The XLM price is the same thing. You can see we've had a nice bounce. We're trying to take the bullish option, which the bullish option we outlined here, bullish, we'll make it green, is right here, because we did just have a bearish cross where the 50 got underneath the 100-day moving average. The 200-day moving average is sitting here parallel at about 44 cents. We bounced off the 31 cents and the 50-day moving average in the weekly time frame, something that we were saying we had to do in order to rally. Now what we're going to try to do is come all the way up here into this 44-cent level and breach that, an area that got rejected and you couldn't hold back here between the 9th and the 13th, right, and then you got to do that in green, and that's how you start to become short to medium-term bullish. You stay above the 200, and then you breach and stay above the top part of that green support and resistance box, which just so happens to have the 50 and the 100 in the daily. The bearish scenario would be you start to get rejected over the next couple of days. You end up back here on this 31 cents, flip it, can't hold it, and turn bearish, and that's how you would end up down here that we drew out to the 25 cents here in the short term, right? So that's what we're looking at in the XLM. The XRP is the same thing. You're bouncing off the 50-day and the weekly at 233. You're sitting just below now this major short-term resistance at $2.55. You can see we did just have a bearish cross where the 50 got underneath the 100, and the that's a bearish cross, the short term going over the medium term moving average. So we need to get bullish is to get on top of this 255, breach the 200, and then end up ultimately on top of the 50 and the 100-day moving average and hold it and stay. The bearish scenario is if you get rejected between the 200-day moving average and where the price is now, you would end up back at the 233 with the potential move down to $1.77. We're trying to avoid that, but we went over this massive hidden bearish divergence in the daily time frame from where you had a peak here to peak here, and you have an uptrending volume or uptrending price, and then you peaked here in volume, and now you're here at current price. You have massively crashing volume. That is a hidden bearish divergence because you would expect the volume to be uptrending still, or at least holding pretty close to what it was at, not drastically crashing in comparison to the price trading, making a new high when the volume has made massive new lows. That is a hidden bearish divergence because the price is moving up still as the volume has crashed at the same time, showing you tea leaves if you know what to read and you know the signs that are secret and quiet weapons essentially in the trading war. If you know how to understand and decipher these hidden divergences and signals within the market, you can see short-term pattern reversals, right? Or a probability, a higher probability, like counting cards, of a short-term pattern reversal or a market change up or down, right? Oh, shit. I left my glasses inside. Like the channel, subscribe. I got to get back to the office. I got some scumbag building guy I got to let on the roof. Peace and the Rex eyebrow. Safe trading, Jay. Oh, I can't let you go. There's major news, Jay, about crypto regulation, and I think this is going to start to go more and more, and it's going to start to having a cost to it and start to be an inhibitor more than it is beneficial, because everybody used to love crypto because it was unregulated outside the financial institution and controlled by the people. But since it became that it wasn't going to be money, they had to change over the last 5 years. They've begged for regulation. They've begged for government involvement, which is only going to make red tape cost more and more regulation. The new California crypto versus money law, primarily Accessibility Bill 39 AB 39 and its related bill established a digital financial law, DFAL, which I believe will expand around the nation now, a comprehensive regulatory framework for a digital asset industry in the state. Licensing requirements starting July 1, 2026. Entities engaging in a digital financial asset business activity with or on behalf of California residents must obtain a license from the Department of Financial Protections and Innovation, DFPI, or qualify for an exemption. So there's all time, energy, and money right there. Consumer protection. The law mandates various safeguards, including detailed disclosure. Licenses must provide consumers with clear pre-transaction and post-transaction disclosures outlining fees, risk, and whether the product is insured. More paperwork, more red tape, more cost, right? And that's not good. Capital and security. Businesses must maintain sufficient capital and liquidity as well as security bonds. Oh, come on, why does it keep doing that? To ensure enough financial soundness and protect consumer assets. Stablecoin regulations. There are specific requirements for stablecoins, and entities cannot exchange, transfer, or store a stablecoin unless the issuer meets certain criteria, including being licensed money and allowing and always maintaining reserves in a specified form. Kiosk regulations. The law sets requirements for operating a digital finance asset transaction kiosk, including limited on daily transactions with a consumer and cap on transaction fees. More money, more red tape, more time. Treatment of unclaimed crypto. Related legislation clarifies that unclaimed crypto assets held in dormant custodial accounts, typically after 3 years or inactively, will be transferred to state custody in their original crypto form, e.g. Bitcoin, rather than being immediately liquidated for cash. Look at that. Treatment of unclaimed crypto. Related legislation clarifies that unclaimed digital assets held in dormant custodial accounts, meaning private custodial, typically after 3 years of inactivity, will be transferred. They will seize it because it's off the blockchain and not being used for multiple years. Oh, what just happened? But you guys want this government clarity. Yeah, we got the source. Go back to what I was reading. Oh, of course. So that's very interesting. I don't have time to get back into the article. Oh, it was on this one. But I don't know how to get back into where I was at. Is this it? Reject all cookies. Requires person engaging both. I don't have time to read all that. So there's going to be more tape, more red tape, and more cost. We'll get more into that tonight. I got to get over here to this building as a shop manager. Peace and love, the Rock's eyebrow, Jay. Come on. What's going on?